I'm Wade McWayne, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at an aristocrat of the U.S. corporate world, a company founded in 1906 that has often been at the forefront of office automation and productivity ever since. With inventions like the computer mouse, the graphical user interface, desktop computing, and Ethernet connectivity to its credit, that company is Xerox Corporation. Xerox operates across 106 countries and focuses on printing and reprographics, offering specialist solutions for healthcare, education, insurance, government, and retail sectors. The company also has an eye on the future, aiming to leverage its track record in innovation and invention. Xerox is currently working on 3D printing for manufacturing, artificial intelligence applications, and devices that will seamlessly transform printed documents into the spoken word and audio files. Xerox has had a tough time in 2020, and its shares have fallen around 50% year to date. In its Q3 2020 earnings report published 2 weeks ago, the company reported a 19.7% decline in revenues and 22.6% fall in sales, while gross margins of the business contracted by 3.2% in the quarter. However, despite these disappointments, Xerox earnings beat analysis forecasts by an impressive 21 cents per share, whilst revenues from the quarter came in ahead of consensus estimates by $160 million, an improvement of some 8% compared to what the street was expecting. Those numbers weren't enough to excite analysts, who haven't put pen to paper on the stock since the earnings. However, they do seem to have caught the attention of an interested party, namely corporate raider and activist investor Carl Icahn. Mr. Icahn is one of Wall Street's best-known names, and his interest in Xerox was made in the headlines back in January this year. It was rumored then he was trying to put together a hostile merger between Xerox and its rival HP, which he also had a stake in, which he has since sold. Xerox had previously approached HP with a $33.5 billion takeover bid in November 2019, which HP roundly rejected. Xerox dropped its pursuit of HP at the end of March this year as coronavirus began to shut down the economy. Against that background, how interesting then that Carl Icahn has made 3 substantial purchases of Xerox stock in the last week. The trades total $1 million for 60,000 shares, with an average purchase price a fraction over $18.32 and a total value of $19,456,000. Those purchases took Mr. Icahn's stake in Xerox to around 14.4% of the company. Since the news broke, Xerox stock has rallied by 13%, aided in part by the discovery of an effective COVID vaccine, which could help reopen the economy and thus benefit Xerox sales and revenues. As it often has been in the past, Mr. Icahn's timing has been extremely prescient. He presumably sees value in the business as trading some $17 below its year-to-date highs. Value stocks are likely to become the flavor of the month if the COVID vaccine can fulfill its early promise, in which case it could be right to follow the smart money into Xerox. That's all the time we have for this week. Of course, these remain uncertain times, so please remember to always do your own due diligence before making any investment decisions.